Man, it seems like it's kind of a crazy time in the real estate industry in central Indiana. Let's get to the bottom of it. 93 WIBC. It is the Kendall and Casey Show. I'm Rob Abdul's in for Casey today, and let's go to the WIBC hotline. Let's find out what's going on with real estate here in central Indiana, because it kind of seems like it's all over the map. We talk with our good friend, the great Mark Dietel, joins us now. Mark Dietel, hello.
Hey, Rob, how are you doing today?
I'm just great. And before we get into this, obviously, everybody knows who listens to this show, but want to put it out there. You indeed do advertise on the Kendall and Casey Show, but you're also an expert realtor in central Indiana, so I thought you'd be the perfect guy to help us get to the bottom of it. It seems like it's kind of weird right now. Interest rates obviously on the rise, but it seems like prices are still getting near record levels. Am I wrong with that observation?
No, you're exactly right with that observation. And you said something on the intro that's really accurate, and I have a lot of other people that are in this business with me to say the same thing. And the business right now is a little bit all over the place. In other words, you can have a situation with a home being very active related as far as going on the market, having interest, and then you could have another home that the assumption might be the same, and maybe it's not getting the activity that you expect. So it is a little bit just all over the place right now.
So why is that, Mark? By the way, Mark Dietel, our guest, great realtor here in central Indiana. We're talking about kind of the just unpredictable real estate market right now. Why is that? Because normally as interest rates go up, prices tend to come down. That, as we just said, doesn't seem to be happening right now. What's behind this?
Well, as far as that particular scenario, the basics, as far as, you've heard me talk in the past about supply and demand. We have supply that has gone down, and we've been suffering that for a while now in our industry. But then again, at the same time, with the interest rates going up really more so than we expected this year, especially in Q3 and Q4 of this year, that's reduced demand. But both of them dropping together has created a situation where actually values, if you look at our new October numbers that have just came out through our local multiple listing service, actually the median sales price for homes in October of this year are slightly higher than they were last year. So it's really kind of, it's affected both sides of that economic model when we talk about supply and demand. And as supply continues to be really low, demand has gone down because of the higher interest rates, and combined, it's created a situation where really from a price standpoint, for a value standpoint, it's good for sellers still, but buyers at the same time who have had rates go up and have found their purchasing power to go down, they're still struggling somewhat as far as making that payment or making that payment work. And therefore, again, like I said, the demand's gotten lower as well.
How much does location play into it? And obviously, you sell homes, Mark, all across central Indiana. Is there a big difference based on exactly where you're at? Or is it, hey, this is everywhere across central Indiana?
Well, I think right now we are fortunate to be operating in a market like central Indiana, Indianapolis, the metro area. If you look at it, if you drill down closely from a standpoint of right here in the metro area, where I'm seeing inventory sit the longest on the market, and actually you hear us talk about the number of months of inventory on hand, some of the highest number of months of inventory on hand and the most inventory sitting on the market actually is right there in Center Township. So we're seeing a little bit of that situation where, again, with the work from home, the offices, changing dynamics kind of in our inner city core, that's created a scenario where you've had the younger buyers, let's say, I call them younger based on my age, is really looking at kind of those donut townships and donut counties, and that's created a scenario where from a demand standpoint it's still strong in those surrounding counties right here around Indianapolis.
Mark Dietel's our guest. We're talking about real estate market in central Indiana right now. You can find, by the way, at markdietel.com, the website where you can learn more about Mark. I heard something the other day, Mark, and it kind of put me off, and I couldn't believe it, and then I thought it through. I thought, well, given the growth of central Indiana, this is probably true. Terre Haute is now the 15th largest city in the state of Indiana. And there was a point where I said, there's no way that's right. And then I thought, that is probably because the suburbs, the donut counties that surround Marion County, have grown so much that places like Carmel and Westfield and Noblesville and all these other places are quickly bypassing, and it shows how much that these donut counties really are growing in terms of people wanting to build and buy.
Oh, you're absolutely right. From a standpoint of what we just talked about on the donut communities, it just makes a big difference as it relates to that. The 30-year-olds maybe have put off a little bit as far as having families and seeing more and more. Well, actually, I'm thankful because we're expecting our 8th grandchild, so that's exciting, and my kids are in that range.
Boy, you've got wait, Mark. You got 8 grandkids and you're 51 years old. That's amazing.
Yeah, that's right. I'm an old 51. How's that? So anyway, but yeah, I mean, again, it's that demand, the surrounding area, right here in Metro Indy, Central Indiana. That's a very strong dynamic as it relates to the real estate market. So it doesn't surprise me what you just said on Terre Haute, because, again, with the growth of the Central Indiana market.
So I would assume that the upside of this is if you're a person who, for whatever reason, your job doesn't require it, et cetera, maybe you got family members outside of Central Indiana area. If you're a person that's willing to live a little bit outside of Central Indiana, you can probably get some decent deals, at least relative to what other people are paying.
Yes, absolutely. And what's interesting, we're still seeing a pretty good migration into Central Indiana from out of the state. So not just from a standpoint of looking around and, maybe, like you said, being an hour and a half away of this Central Indiana or, the Indianapolis market, but also people coming in and actually viewing the state, more places in the state, being a nice place to settle down, work from home, or even from a retirement standpoint.
We're talking about the real estate industry here in Central Indiana with Mark Dietel. Find him at markdietel.com. All right, Mark, before we let you go, I want you to walk us through the perspective, because you obviously represent both buyers and sellers, and kind of give us the strategy for both. Let's start with a buyer right now. If you're a buyer, what should kind of your strategy be if you're thinking about buying a home?
Well, number one, right now, don't be afraid to talk to your agent about looking at days on market on properties that are actually actively listed, because that's going to give you a strategy. A seller on the market right now, and if they've been on the market for a little while, 20, 30 plus days, they're motivated to sell right now, and that's why they're on the market. So that's number one. Number two, right now, I just read this morning, rates have actually ticked back, actually lowered pretty significantly just in the last Thursday, Friday, with the Fed coming out with no rate hike. And there are also some employment numbers, which showing unemployment up slightly. That's going to create a better scenario for rates. So make sure you're shopping rates on almost a day-to-day, week-to-week basis. So that's number one. And then number two, find out if there are sellers that are on the market that's willing to pay down or willing to offer something called a 2-1 buy down. That allows sellers to pay for additional costs for buyers to actually lower their interest rate by up to 2 full percentage points the first year, and then the second year it's 1% lower. And then from the third, it goes back to the number that they happen to be approved about today. I said a lot right there. That 2-1 buy down is actually good for sellers and buyers, and I could talk more about that in the future if you'd like to.
Yeah, absolutely. And that's why we always give out the website as well, markdietel.com. All right, Mark, let's flip it real quick. If you're on the seller side of things, what should your strategy be?
Be in the mindset right now that the buyers have choices and they're looking at ready to move in homes. There's just not a lot of buyers out there right now looking for homes that they got to go in and they got to spend any type of amount of time, money or time on improvements, and be competitively priced. When we look at a home and we look at a valuation, we give our sellers a range. And within that range, based on the different conditions of those homes that we're looking at in that range, really is how we help sellers set their list price. But with the absorption rate, the number of months of inventory going up, you don't want to look down the road and be too aggressive on the list price. So I'm always encouraging all of our sellers right now, let's be realistic on the list price, and let's go out there and kind of hit a home run right when we go on the market. As soon as you start sitting on there for 15, 20 days, it's starting to become a disadvantage for you as it relates to getting your home looked at and buyers looking at your home.
You can find him at markdietel.com. The great Mark Dietel, you're the best. Thank you, my friend.
Thanks so much, Rod. Have a great day.
93 WIBC, it's Kendall and Casey Show.